This is Rod Kusin, Spooman for Risk, a continuation of our discussion about our range bar scalping approach using order flow and premium. Now, our first opportunity that we're going to show you is here at roughly 9:21. We finally have some divergence here, and the market moves up, but three ticks up does not move down. All right, does not move down. And so we're looking at least one or two ticks down to retrace that range bar. We get divergence at the top here, so you've got 1, 2, and if you watch the order flow here, 3, and the premium, 4, and the premium is still not divergent, 5, and finally the premium gets divergent here. So you've got at least a point there. But on the way down, you leave a retracement back up. Now, exactly where you're going to pull that off is a little tough. You could have gotten in here and order flow would have stopped you out with the divergent bar coming up almost immediately. But you're looking at a retracement back to 24.19. 24.19. So let's see where we can get in. Next opportunity is to get in here, but as you do have some divergence here, unfortunately, order flow tells you just the opposite, and you either move your stop, you got a 3-tick move down before this takes off, and maybe you average in at this point because you've got more evidence of a long trade developing in here. A lower low on the premium, though, suggests that you better be careful. In any case, getting in here leaves you with a target of 24, once again, 24.19. And you're in here at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 ticks. Okay? You got a point here, all right? You got 4 ticks there, 14 ticks thus far, or perhaps at least 11 to 14 ticks, depending on whether you're average in on that second trade. Not bad. Here's your next range bar with a retracement back to 20.75. So we look for the divergence on the premium. Premium is still moving lower here. We finally get the divergence here. We have buying, so we're getting in either at the low here, which you may have the opportunity to do, but at least on the next tick up. Okay? And so you're at 2019.75 with a target of 20.75. So there's another 4 points there, and you get that right in here. We move up to 20.75 on this bar. If we can get this thing to work the way it's supposed to. Come on. There we go. 20.75. Another 4 ticks there. You're now up at least 15 to 16 ticks on these 3 trades. And you now have an opportunity to also go short because you've got this retracement here. Okay, back to this level. At 2019.75. Okay, so you've got a 3-tick move there off of this divergent bar. 1, 2, 3. So now 3 ticks there, and you're back to what, maybe 18 ticks. Let's continue. This turns out to be only about a 2-tick move, so you're at 20 ticks. Now we have over here a very large range bar, 1, 2, 3, 4, 5, 6, 7, 8, 9, a 10, a 10 tick bar, range bar. That's going to retrace at least 3 to 4 ticks from the top. And so you're certainly going to be able to get maybe 3 ticks out of that. We don't show it as a range bar because we had an immediate retracement down to 3, but that's probably not enough. 4 will be better, and you've got that opportunity that comes in fairly quickly. And now, just before 11 o'clock, you get this range bar where we don't retrace just yet, and you have an opportunity to at least move it into 1, 2, maybe 3, depending on where you can get in here. But what's interesting is that it gives you 3 before you even see any evidence of buying in here. And if you're following the premium, all right, if you're following the premium, you're going to get even more than that, because each time we hit a new low, you don't have any real divergence here, and we keep on going down further. So not only does that retrace, but it keeps moving, and the order flow and premium gives you that good opportunity to take advantage of that. And then another kind of interesting situation occurs here. You've got the combination of a new high, or a relatively new high on the premium here, with the range bar here. That's calling for the retracement and a move back up to this level, which you have the opportunity to get 1, 2, 3, maybe 4 ticks out of that, which ultimately takes place over here. So you've got somewhere in the neighborhood of 24, 25 ticks within the first few hours, and 3 hours, let's say. And just working off of the tick arrangement with the scalping technique, using the premium and order flow, real nice opportunity for successful trading using just a simple scalping technique. I'm Rod Kusanen, Spooman for Risk.